are listening to the Ivy Podcast. Learn from the business titans in areas of strategy, innovation, negotiation, and all things leadership. We interview the Ivy League, Fortune 100, and top startups of the world. Now, here's your host, John Karsibayev.
On this episode of the Ivy Podcast, I have a very special guest for you from the field of venture capital, Mr. Adil Nurgozhin. He is the chairman of the board of directors in QazTech Ventures. He is also the managing director for Digitalization and Innovations in the Baiterek National Managing Holding and the chairman of the board of directors in the National Agency for Technological Development of Kazakhstan. Adil has over 10 years of work experience in corporate governance, technological development, investment, and financial activities. He holds master's degrees in business administration and public administration from the University of Montana. This is where we have actually met. Between 2012 and 18, he was a partner of the international venture fund I2BF Global. He was the investment director, head of the Kazakhstan office of the Russian Kazakhstan Fund for Nanotechnologies. In addition, he is the founder and investor of a number of startup companies where he is participating as an angel investor. Mr. Nurgozhin is a serial entrepreneur and investor with a deep knowledge of the Central Asian market. In a nutshell, this guy is a business celebrity in Kazakhstan. Don't believe me? Just go ahead and Google him. You'll end up getting pages and pages and information on him. Adil, welcome to Ivy Podcast. It is always a pleasure talking to you. Have I missed anything in your brief summary, or is there anything you would like to add?
Sounds good to me. Thank you for inviting. It's always fun to talk to you, my friend.
All right. It's so just real quick background for the listeners. Adil and I, we go way back. We had actually met while doing our studies in University of Montana, believe it or not, all the way from Kazakhstan in the middle of nowhere in the mountains. So without further ado, I just wanted to jump straight to some of the questions that we wanted to cover in this podcast, primarily focused on venture capital, venture fund, because this is your area, this is your field, and a lot of the listeners that subscribe to the Ivy Podcast actually in this field. So this would be very interesting. Real quick, you mentioned something about, you have a lot of good quotes, and through the communication that you always quote other famous people, and I think something that stands out to me that you pointed out was, when aiming something in the sky, target the God himself, by Balzac. Can you tell me a little bit more about this, and why is this an interesting quote to you?
It's very actually simple stuff for me. There's also a Kazakh proverb: if you want to fall down from the like camel. Camel is the highest animal, right? You can ride. So some people ride elephants. We don't have elephants, so we ride camels. So the idea is very similar. You target something real big, and then you claim it, and then you work it because it's worthwhile of your time, efforts, and the bet that you do. And it will stimulate you to move forward, give you your 100%, 150% in, and then even if you get something out of it, not everything, you get half of it, it still would be a lot for everything that a person can achieve in a lifetime sometimes. So I like the quote, and it gives enough drive. It's very challenging. It's demanding as well. It keeps you focused and running, and that's a good one, I think.
I love it. I love it. So it's basically, in a nutshell, saying that if you do something, might as well do it all the way in, 110%, so that if you win big, or if you fail, you learn a lot from that. This is great. So this is definitely an inspiring quote. In terms of some of the latest trends in venture capital, Obviously, you've been in this field for quite some time now, and it's very cyclical. A lot of different trends, they come and go. What's the latest trend? What's the hot on the market these days? What's the next big thing? So if some of the listeners that are asking me, where do I invest? Where do I go? What is Adil Nurgozhin as a venture fund looking at these days?
What we're looking at? We are looking at, well, we are becoming a very cautious about all kinds of larger trends. We see a very high concentration of 4 large companies plus 3 in China that essentially buy everything out. We see those niches have less chance to develop and less chances to strike. Well, we also like the industries that are less concentrated, say biotechnology, say healthcare applications, fintech to a certain extent at certain niches. And what I like about is that venture capital for the last 5 years have been very opportunistic, have been exploring many different markets, and all over the world, but mainly in Asia, where the potential shows the right numbers, the right digits. The entrepreneurs are hungry, and we like that too. I mean, I like Southeast Asia, I like overall Asia, and I feel like there you could be doing many things and many innovational things that will solve different kind of problems that are not necessarily relevant to the United States or Europe. What I see also is that the United States is no longer a center of the world. I see there are alternatives, and we shouldn't be missing on those. We should be participating, we should be active there, we should be in touch with all possible new waves. We also see that shift of capital that is increasingly coming from Asia, gigantic numbers like $100 billion vision fund from SoftBank, and the play that Alibaba has and Tencent has and Didi has in Southeast Asia. Only in 5 years, you could see that there are 4 unicorns just in Southeast Asia appeared. Like, Uber is out of there, but then you have Grab and Gojek competing in the market of 650 million people. That all of those markets are growing, 2 digits, 9%, 10% annually, and will continue to grow because of the young population. And it happens that all the engineers that we have been trained in all the Western schools, myself and yourself and people like that coming back home and working at home, we could see the trends that they're getting better paid. The quality of life is a lot better. So the Chinese engineers are coming back home. It's very similar trends happening in Southeast Asia as well. Indian engineers, it's a very similar story. So I believe frontier markets will offer the opportunities. I believe less concentration is better. I, to a certain extent, agree that we should be looking at new industries that are not in the radars of big largest internet giants in United States or in China. We should be looking for more concentrated markets like Baiterek, for instance. Those are the trends, and we're watching them and participating in them, and we'll continue doing some efforts in that sense.
Interesting. That's I think you nailed it on the spot in terms of looking at not only the trends itself but also the markets themselves. I think that's why you guys have also been successful in identifying the area. So what has surprised you the most recently in terms of the emerging markets? You mentioned Southeast Asia. Anything in particular, any particular country that really stood out in one of your recent trips or startup events or anything like this?
Well, I've been going back and forth in all over countries in Southeast Asia, but Singapore in particular, because that spot is offering the tremendous opportunities to have everything within a 2 hours flight, and an English law and a mature financial center, and happens that they have $2 trillion in management in that particular one city. And I've been watching them how they were developing from copycats in 5 years into a deep tech startups right now, how they went from e-commerce into fintech and serving the underserved population with huge consumer markets that are developing. And I've been watching them how they shifted from a small, seed funds and accelerators in 5 years into the fund of 200, 400. $500 million worth of under management, and it's being rapidly developing. It's so fast you just cannot grasp it. And I believe there's opportunity, and we should be digging there more and participate actually. And don't want to miss it out. I'm very surprised how they learn fast in a very very aggressive manner. I believe, and I also was surprised in China, for instance, that it's no longer copycats. It's like we have these stereotypes in our heads that Chinese do copies, but guess what? Everything they have now is completely new technologies that specifically address the second largest market in the world, and the way they use technology, the business models that they use, the combination of both, and the people that they have allows them to offer world-class products that didn't exist before. And guess what is happening right now in China and in Southeast Asia, and it's not even coming from Japan. That's the most interesting fun part. So we got to be very very ITBF Global is an American venture capital firm. We are a little bit biased, and we're very local. We tend to focus on the American markets more because we understand them better, etc., and offers more opportunities. But what we've been watching for the last 2 years, that companies are being overvalued. Opportunities have been scarce, and the big guys are just leaving a less and less room for VC to remain a VC player, but rather we have to become now creative. As you probably heard just recently, like a couple days ago, Anderson Horowitz applied for a financial advisor license. They don't want to be a classical VC anymore because they see the opportunities that they need to become something like creative investment bankers, playing in a PE field, playing in a venture capital field, at the same time offering advisory services. They're looking for new opportunities and new niches that pure VC doesn't make any money in. So that's the trend. That's what's happening. And the leaders have to change faster. Mm-hmm. So all these things are very, very interesting, amazing how fast, how new opportunities are developing, how new markets are coming up. Money doesn't smell if we don't go to the moon, but, make your 10x's, 20x's in a large copycat like Didi, whatever. And my stand on it is it's just fine by me. I made 20x in Southeast Asia, just copying the Uber. Yeah, let it be. It's fine. No problem with that.
Right. That's you actually touch upon on a very interesting point, because as I'm going through the Harvard studies, everything is based on case method, and there's a lot of cases that are being analyzed, very similar model than what you're describing, where a company takes a model of something that's been successful and just basically implements it in an emerging market. Something just takes the dominant position in that area and then competes with that with that bigger company, and with the intent to grab the market share or get acquired and so forth. So that's definitely interesting. So on that topic, as far as the investment criteria in terms of how companies are being evaluated and chosen for that particular investment, just want to give the listeners a quick example. You have led the investment into Primus Power, which is also backed by some of the investors that include like Hong Kong's Success Dragon, Matador Capital. The investment officers are well known, Saudi family, with also a portfolio of existing kind of pretty big players in the VC world. Can you tell me a little bit more about that particular investment, how they came about, and what did you learn from that?
Yeah, We've joined the company like 8 years ago, I believe. At the very initial stage, Kleiner Perkins was the leading investor there at the time, and it was on the way of clean tech startups because this is a battery, right, and essentially energy storage solution. Now, when you talk about hardware startups, they're always, I would say it's not an easy game all over from the very beginning. You need actually hardcore engineers and deep tech, actually a lot of science behind it, a lot of patent protection, market protection as well, because Chinese, as I said, they're good in not only copying but actually coming up with stuff. So the company is still offering one of the leading energy storage solution in the world. Although there were quite a few of those companies that invested many different cases. Unique combination of very strong team IP that comes out from Stanford and an opportunity that was there because markets are growing, still continue to grow, and alternative energy is becoming increasingly cheap, which is still the case. It's still being pushed and it's still being invested heavily. As you know, like only China invested something like that. They just in 10 years they built something like 500 gigawatts worth of solar energy stations only. That is like 10 times of the whole energy balance of Russia, for instance. And that's only solar. You calculate everything. And they continue building it. It's huge. Gigawatts. It's huge. It's just amazingly. So the price per panel is decreasing. You need to store that energy because these sources of alternative energy are usually unstable. They depend on sun comes up during the daytime, then it's gone at night. There could be some clouds and shit, something. There are many distractions of that energy. You need to store it, and it needs to be cheap, and it needs to be reliable, and then you need to pump it back when the peak hours hit, which is in the evening or in the morning when people use the most. So all these problems need to be addressed, and then the combination of very strong, as I said, IP and the team, especially the CEO himself, Tom. I think he's the most important asset. I think, but I mean, more important than the batteries themselves and the patent themselves. It's interesting. We have like 50 something portfolio companies, right, at any given time, and then you analyze that. I just did my calculations and get out all the CEOs and founders. And get my mean for the age and for the experience and everything else in combination. I see the portrait of a person that is over in north of 45 years old, has like 20 years experience in engineering and business development. The portrait is very, very interesting. That when we talk about startups, the stereotype is a young guy with the young ambitions, blah blah blah, building it, creating a huge company, etc. But guess what? Out of whatever we have, the most successful entrepreneurs are already mature people with the right network, with the right experience, and they're more resilient and they're stronger, and they've gone through a lot of stuff already, and they don't give up that easy. And statistically, out of what we have is most of them are mature guys. That's very interesting combination of the teams as well. So teams obviously. I don't believe in one person. I'm not. I don't buy into Steve Jobs without Tim Cook. I don't buy into Gates without Palmer and the rest of the team. So usually you look up for the teams with the visionary with the genius tech guy behind him and the right corporate guys behind him. Then that chemistry in between them, whether they hear each other, they know each other, the communication in between, and then the right experience. And then the second thing is timing and the markets that they hit. As I said, you hit something, you target something really huge. So you gotta go really big markets, like way above 1 billion in a approachable audience, 20 billion in perspective, whatever. Then you're talking about big games with the big numbers. and then you target out of that. So that's very important as well. Growing trends, that is something we have to consider. And nowadays you have to consider whether or not it's all of a sudden might become a target for Amazon, because you don't want to fight with Amazon. I mean, you don't have enough resources to do it. Too early. When you're ready, you start biting. If you're good enough, you can sell, and it will be good exit opportunity. But if it comes through prematurely, they will just shift the whole industry, and the niche will be gone in one day, and that's not easy. So that needs to be taken in account as well.
Right. Yeah, I like the point around the human capital of the investment part, mainly because just as simple as when as bad as it sounds, when shit hits the fan, as far as does the team and the leadership have that capacity to push through it and essentially succeed in the time of adversity. Because if they don't exhibit those capabilities, I think it's doesn't matter what you know, and doesn't matter what how smart you are, things will fail.
That's right.
So as we talked through, we talked about the trends, we talked about the markets and the areas. You've covered some of the investment criteria that's important to you, and the venture fund that you're leading. In terms of the actual valuations of the companies, there's a lot of different formulas, a lot of mathematical, statistical, financial models that exist. All the CFOs and all of that look at that. But from your perspective, when you evaluate a company, what, aside from, of course, the numbers, the revenues, and things like that, what's important to you? What stands out? What is one of the immediate red flags that you look for, or anything that sparks your interest? You're like, okay, wow, this is definitely piques me. I'm definitely gonna move this forward. Is there anything that within that range?
We always do our technical part regardless. Depending on the stage of the investments, if it's on the latest stage, we obviously do the due diligence on technical issues, IP protection, and all kinds of stuff that we need to take care of. The faster, the better. But at the end of the day, it's an opportunity, and as I said, the team that can pull it out, and it's a very, I would say our business is very intimate. It's about people. It's all about people, actually. So you want to know the person, and you want to be able to live with that afterwards. When it's almost like I'm getting married, but you have to decide very fast. So it's very intimate business. It's all about relations at the end of the day, and if you can build the right chemistry between the investor and the founder, meet each other and continue, hearing each other, I think that's the key. That's the key. Everything else is about negotiation. The prices you compare, there's a technical ways you do it. You do your multiples. You see the rest of the markets. There are just mathematical formulas, or whatever, discounted cash flow, all kinds of stuff you do that, and then you meet and you talk. And if you want to really close the deal, you have to just push it and close it fast, because that's what happens. If the deal is too good, and if you're too late, that could be an issue afterwards.
Got it. Yeah, that's
so all this intuition thing, it's experience thing, and then the deals that you've done. The more you do it, it's like learning by experience. There is no other way. Theory doesn't help. That's what it is.
Yeah, it's almost like it's not a short sprint. It's a marathon, if I was to put an analogy to it. And you build stamina, you build endurance through this process, which allows you to essentially make better judgments and more calculated decisions in terms of having that, trusting your intuition, like you said, and being able to rely on some of that initial gut instincts when, for example, you meet then you meet the founder for the first time, or you having the meeting with them and you analyze the chemistry and how the communication goes. I think that's goes a long goes a long way.
Yeah, and then you cannot build it, the expertise in many areas. You can become eventually an expert investing into a very particular space of biotech, for instance. Obviously, you stick with something that you understand and you know, and where you can get the credentials, you can do your due deal easier. You can call up people and ask for opinions regarding the personalities, whether or not they're jerks at the end of the day. You never know, and that is also plays out, of course. The VCs tend to focus on something that they understand and know best, and they stick with the industries that they see the opportunities in.
Right. Absolutely. So in terms of, as we talk about building that stamina, that endurance, obviously, there were a lot of um, not successful investments, not successful companies. What has been some of the, is there a particular trend that you can pick out in terms of lessons learned, or are those all standalone kind of ad hoc situations?
I'd say every deal that you close and then hopefully exit, you learn something, but you learn more from the failures that you've done, from the restructuring that you've done, from the poor structuring of the deals that you do, and you kind of develop tools that you like the most, that you understand the most. You kind of develop a taste for whether you're an early kind of investor with a smaller ticket but with a lot of exposure, or you were a cherry picker at the late stage and you're good in watching them for like 2-3 years before you coming in with the bigger buck. So it's very individual, and every partner as a personality and as an expert and as a professional develops his own very unique touch. So amongst our partners, like we have 5 of us, and all 5 are different, and the way we operate is very different. Which one was the most successful? Well, those who operate in the better markets so far, because some of the ecosystems are very young and very immature. Say this part of the world, or at the time Southeast Asia. I cannot tell it's mature yet. It's still a very young ecosystem, but 5 years ago you couldn't know what's going on, and there's always a specific knowledge about country as well, the way they do business, the language thing, and then all kinds of cultural things that you need to understand and be part of it. Always unique experience. That's why I like it a lot. There's always something to learn. Always something to learn. It's a lot of fun.
Yeah, I'm sure, and I like a saying that goes that we don't fail, but we learn instead. So as you've been talking through the last couple of points, I think one of the things that I pick out is an ability to apply that failure, I guess, so to say, and make it more of a, here's what I learned from that. It's not necessarily a failure, it's an actual experience, and I paid for that experience. And some of that experience could be very costly, some could be not so much, but at the end of the day, that contributes to positioning you towards the next successful thing.
That's right.
That's you're a member of various boards. I want to talk a little bit more about board memberships. Can you tell me just at first what are some of the boards that you sit on? What are the boards that you represent?
Well, yeah, the partially there. Well, you can divide it into 2 groups, right? The startups that we're in as a venture capital investor from our funds, where we obviously have a very clear agenda of protecting our investment and growing it further and facilitating the growth of the company. At the end of the day, ensuring the right exits. That's what we do. And then the other bunch of companies that I participate is I'm very active as an angel investor regionally, and I do a lot of investments locally into younger startups. It's always fun to mentor. I enjoy a lot, and some of them grew into pretty good sizable companies, like say Chocolife, which is a e-commerce holding corporation here in Kazakhstan, which is now the last year they closed was $150 million in revenue. When I came in, they were 5 times less than that. So it's fun to watch the growth, but it's also fun to contribute, and it's a lot more fun when the founders are very agile and the listeners and they hear what you say and they learn fast. That is so much fun to see how the companies are growing and maturing, and you could be the part of the big idea and contribute. Mm-hmm. That's what I usually do. I don't sit on the board for the sake of sitting. I'm not a corporate guy per se. I'm not into a compliance. I'm not at the corporate governance, and I'm more like a facilitator of growth and business development and opportunities, and then a facilitation of exits as well. So that's what I like the most, and then I tend to be very active, introducing the founders, facilitating the rounds, helping out with the document structuring, and all kinds of stuff like that. It takes a lot of time sometimes, but and then there's a block of companies that I'm also sitting as an independent director, which is a little bit different role, where you have to be prudent. You have to understand, the regulations, the limitations of the companies. You have to and you have to be for corporate governance, and make sure the companies are developing and becoming transparent, understandable for investors. In that sense, the role is a little bit different, where I have to be playing a role of a compliance officer to a certain extent, making sure they are very understandable, very predictable, very transparent company that investors like and would like to invest further in, and not for the opportunity per se, but for the stable, predictable manner of earning that doesn't allow fraud to happen and that doesn't allow conflict of interest. That a little different story. And those companies usually are state-owned corporations like Zerdia, for instance, a national holding for IT development, and then NATD, which is National Agency for Development, Technological Development. So I help them to do that kind of work more. Mm-hmm. So all 3 roles are fun, but at the end of the day, it's still a board, and then you need to manage it. You need to be a member of the committee. You run it, and then tasks are very different. It's all strategic level, but you take a responsibility because you sign the documents, and you have to make sure you're valuable. If you're not, I'd prefer to get out and just don't commit myself altogether.
Right, and that makes sense. So some of the questions that I get at times, as far as the board memberships, it's more around younger, aspiring, not only entrepreneurs but also in the corporate sector as well, where, for example, a professional, he's growing through the ranks, and he's trying to break through that, that senior director, VP level, get into the C-suite. Obviously, to get to that, you also need to expand your portfolio, expand your diversity in terms of professional experience, is being on those boards, having some, experience participating and essentially being on some of those boards. So questions that do come up is around how do they get involved? How do you get yourself plugged into? How do you get onto a particular board? Is there a particular advice or something that you have in mind that you could recommend?
You have to become an expert in your area of interest, and then you have to, I guess, build a reputation of being a person with high integrity and being clean, transparent, understandable. Building a personal brand will also help. Again, the reputation follows everything, and then if your reputation is crystal clear and you provide value, you definitely will get approached with some offers. And then I guess experience, the more experience before that you have, the better. For younger specialists or younger managements to get in this kind of roles is easy through startups. I mean, the company size matters because the company is small, but you're still in the board. It also counts as an experience because it is an experience actually. And little by little, you build a portfolio of different kind of things that you do, and then you grow the size. You get more responsibility, and then it kind of builds up. But the most important is integrity and reputation that you have. You have to be clean. You have to be reliable and provide value.
Mm-hmm. Got it. So in a nutshell, in terms of for someone who has never been on a board, one of the recommendations would be to get involved with something on a smaller scale, perhaps even their own startup board, or a fellow entrepreneur who is running a startup and getting involved with their board and getting some experience from there and then growing from there on out. And also, would you say networking would be another great way to network with the right people in your field and try to get involved with some of the boards in that area?
100%. Networking, it's all about networking at the end of the day. I mean, people should know you.
Mm-hmm.
And when they invite you, some of them are, for a specific purpose. For instance, when a company prepares for an IPO, you want to change the board, but you not only change the board, you change managers as well, and you prepare a team of consultants, and there's a lot of preparation work that you need to be done, and you want to construct the right board. That time you go to a headcount hunter and pay money and get the right person that will provide the value, but it depends on the purpose, right? But then most of the time it's done through a personal connect, and that's about networking. So I 100% agree with you. It is about networking, but networking also needs to be. You shouldn't be failing people. Again, back to reputation. It needs to be clean.
Right, absolutely. That what you said is right on point. Your personal brand, in terms of that, that goes a long way with anything, not just boards or anything that you get involved with. In terms of, so I know I personally and very closely know some of your team members, and I want to talk a little bit more about structuring the team around you, molding and essentially growing together. You do have a team of, it's a smaller circle, but it's a team of rock stars that I like to say. And I like to implement that, methodology myself in terms of, the companies that I'm running or whatever the consulting gigs that I take on, in terms of taking someone who is less experienced, but rather willing to learn and rather willing to listen and be able to, to apply that and grow together. What has been one of your philosophies, so to say, when you hire, when you build a team around you? Can you talk a little bit more about that?
Well, two things that, or three things essentially that I pay attention when kind of choosing team members is first thing first. It's the integrity of the person. Doesn't matter what happens. He needs to be. He needs to be just honest, a good person altogether. And that is very basic stuff, right? But then there's another thing is that I pay attention, and I want to be having a team that is complementary. So usually you're dealing with a person that is kind of different from you, with a different set of skills, a different character, a different approach. But that's then you can construct a team of different type of personalities that coming together on the integrity, which is a set of values that you guys share, right? So first of all is the values that you guys share first thing first, and then the second thing is the skills, the characters, and the chemistry needs to be complementary. I think it worked best way that when everyone is kind of helping each other out in different areas, and then and actually dragging each other upward, and then developing each other that way. And then the third one, criteria, if you wish, is that I wanna be able to rely on those people in terms of, there's a saying like you can only step on something that resists you. Well, it's like physics, you know. You put more pressure, they resist. I want my people to resist the pressure and be able to still communicate. So not to close up, not to get offended, not to become touchy and feel about it, take it all personal, but discuss things, argue if necessary, prove, go back, dig more, come back, discuss it, insist on your point. Don't give up just because a leader said so, or a founder said so, or whatever chairman said so. But prepare yourself, argument, and still be able to communicate. Doesn't matter what I say. Challenge me, and if you can, and if it's logical, and if it makes sense, of course we will agree. And that communication is very important. But first of all, they need to be able to resist and prove themselves. Then the communication is the second thing. They need to be able to communicate, and that communication skill is something that actually I think that might be the first thing. Communication, I think that's the most important thing. Able to express themselves, don't shut off, even when arguing, and even when they don't agree, they still continue talking. That is so important. That is very important. Yeah, I guess these are the things that I care about, and I try to not to miss those.
Mm-hmm. Interesting point you make around that resistance. I think you're referring to a concept, essentially, you don't want to be surrounded by yes men, someone who is not just agreeing with you with whatever you're saying, but actually someone who can prove their own point, even if it means disagreeing with you or disagreeing with the leader, and be able to stand that ground. And I think it's a rare thing to see, but I think it's one of the critical, characteristics of high potential.
Yeah, that's 100%.
Great. So this we've covered a lot of different topics, and I think it's very insightful, some of the information, and I definitely appreciate the insight. Obviously, you guys deal with a lot of that secret sauce, so to say, I guess. So definitely all the information that you shared is very much appreciated. Before we close out, we all read, we all try to put some time aside to read on a daily basis. What's on your desk these days in terms of a book? What are you reading now?
Yeah, that's an interesting one. I usually I get really bored when I read one book at one time. I usually read 3 books at the same time. So like one is usually about personal development. Now I'm reading a book of Dispenza. It's one of the bestsellers. So he has a series of. He's a practitioner. He's a psychiatrist, and he did a lot of science research and etc. He has like series of books on how to manage your mind and then emotions and essentially your body, and then develop a new yourself. How that affects you. It's like, but they did it on a scientific base with a lot of research, with a lot of data on the people who got got into the accidents and the very heavy situations where some people who got cancers and then returned back with a full remission and stuff like that. And then how mind affects your body and your life, and how, very interesting books that I've been reading from him. So that's kind of fun to read because it kind of explains also anatomy of the brain, how it works, and then how the decisions are made, how habits develop, and then after habits, how you become what you are, and then the traits that is left afterwards, the neurons, how they develop into the habits, whether you're a negative person, and if you continue being one, eventually you become a person like that, and stuff like that. So very fun stuff to read. Mm-hmm. And then I'm reading a book about the Sultan Baybars. He was one of the leaders of Egypt. I mean, he's a king of Egypt at the time, a Muslim king that came from the slave. Essentially, he was one of the Kazakh tribe slaves in 13th century, and his family was killed, and then he was just sold in one of the slave markets, and then he came as a slave to Egypt, and then he became a ruler of Egypt, and he stopped a Mongol invasion into Egypt, and also he won the Crusaders as well. Very interesting personality, and as a life of a very extraordinary person. I'm reading that book now. And the third book is about fintech startups. It's the Tinkoff Bank is a Russian online bank, #1 in the world. I think they're now largest bank, about Tinkoff himself and how they built the bank. So I'm reading all 3 books now. One is about business, the other one is about brain, whatever, and mind, psychology, and the third one is about an interesting personality, a leader, and autobiography. Essentially, it's kind of fun stuff to read.
Really cool. So I picture all 3 books open at the same time on your desk, and you're just going one book through the other, reading all 3 at the same time.
It's like it depends on the mood, right? And then if I'm sitting in my couch, I like to read about fun stuff. And then the other book is here in the office about the fintech bank, about the online bank. It's here when I have an opportunity to, take a break. I just take that book. And I'm a slow reader. I kind of like to read, and some quotes, I mark them, and sometimes I come back to the next page. I like some thoughts. Then I close the book and take my time to think about it and think it, And sometimes I come back again, and it depends. There's a good saying regarding the books. I don't know who said it, but one of the Western philosophers, I think, he said, you better be reading the book at the same pace as it was written. Meaning you have to, kind of understand it, just not swallow it or skim it. But if the book is good, the book's major objective is to make you think and live it, right? Well, that's how I kind of like to read books.
Got it. Yeah, that's very interesting. And for the listeners, I will have the links and more on the actual descriptions of those books that Adil is talking about in the episode notes, so you guys can actually see and get those somewhere online. So in a nutshell, Adil, thank you very much for your time. I really appreciate it. I know you're a really busy man. You have probably stacks and stacks of, potential investments to evaluate right now, even though it's almost 7:30 p.m. in Kazakhstan right now. So I really appreciate it. Thank you so much, and best of luck to you.
Thank you. I had a lot of fun. Good talking to you again. Good to catch up, bro.
Thank you for listening to the Ivy Podcast. Be sure to subscribe to our RSS feed on ivypodcast.com and all major podcasting platforms like Spotify and iTunes.